morning, everybody. I'm Pax, and welcome to the Place Your Trades Network. This is my friend, my sister, my protege, Penny Lane Blayne, and we are the network that focuses on trading daily options using CME Group event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. We have a special edition today talking about some things that Penny wrote about. She wrote a beautiful article yesterday. I hope everybody has had a chance to read it. We have a great show for you. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading CME Group event contracts. This is what we're all using at Place Your Trades. And Penny has the app up on our screens so that we all can see it right now and just see how it works. It's very user-friendly. Believe me, I am an analog man in a digital world. The only thing I know how to do on a computer is email, search Google, and trade. That's it. Tradeovate's app is actually very user-friendly, and it's very easy for me to use. I use it all the time. So good morning, sister. How are you?
Good. We were just, before we went on, looking at this little rally we got. I said, what happened? You said, oh, it's just a little rally.
More buyers and sellers.
More buyers and sellers. You know, last time we had kind of a emotional Capital Preservation Friday. We had like an incredible opening range, and it was one of the best trading days I've had so far this year. Just to throw that out there. However, I had such a huge day yesterday. I think the smartest thing for me to do is take the day off.
Why?
Well, you know, there's that superstition that after a big win, you're going to have like a massive loss the next day. And I would prefer not to do that.
It's actually not a superstition. It's the reality. You buy a car. I think we talked a little bit about this last week. You know, you buy a car and usually you're going to lose money. You go on vacation, you come back, you lose money. That's it. We did talk about it. You come back from vacation, you lose money. You buy a home. You know, when I bought my first big house, I pretty much lost the down payment of that house pretty quickly. You know, all of that stuff. And I remember after I bought my first nice car with trading money, I remember an old trader telling me to take a couple of days off because usually you lose the value of that car. So it's not, you know, when we have a really good trading day, oftentimes we can follow it up with really tough trading days because we're overly confident, we're overly focused. You know, we start to think of ourselves more as the next coming of Warren Buffett or the next Paul Tudor Jones, when really we're just, you know, Penny Lane Blayne, we're just Pax, we're just traders, you know, we're just the same trader that did the same thing yesterday, you know, so we need to, I don't know, to me, it seems so much simpler when I focus on each trade, one trade at a time. When I think of it in the visual that I use is I'm building, with my trading, I'm building a building. I'm building a big, beautiful, magnificent building. I sound like Trump when I say that, but I'm building a big building. But I do it one. Didn't that sound there? Big,
magnificent building. It's magnificent. The best building that's ever been built. It's magnificent.
Yeah. I build that one brick at a time, and that brick is each trade. You know, one trade at a time, and I stack it on top of the other, so I don't get too far ahead of myself. I don't start to feel too good about myself. And likewise, if I have a bad day, Blayne, or a bad trade, when I take them one trade at a time, I'm not going to worry about the next trade. I'm prepared for that for the one that's coming. I'm not going to worry about it. Likewise, so I don't want to feel too good about myself, and I sure don't want to feel too bad about myself. I don't want to define myself by my P&L, my sense of safety, my sense of self-worth, my sense of self-possession. You know, I don't want to sound self-involved or self-absorbed, but I guess it is. My sense of self is not tied directly into my P&L. I think that we all go through this process and this progression. And I think that's what people mean when they talk about being a mature trader.
And that, of course, hits on so many topics in the blog post. And I think I say in the blog post that a part of my happiness as a person is now tied to how well I trade. And that honestly doesn't mean P&L. It just means, can I successfully execute what I know needs to be executed? And I think of it so much like there are things we know as humans, like getting the right amount of sleep is so important. You know, exercising, so important. Eating healthy foods, not, well, I was listening to a podcast yesterday that said drinking, period, actually is very bad for your brain, but drinking too much, obviously we know, not good for your brain. Being just lethargic, we know that helping other people brings you more of a sense of joy than it does to other people. Reading is so good, any kind of reading. So good for your brain. So these are things we know. And as humans, a lot of times we willfully ignore some of these things and don't do them, even though we know that doing these things will bring us happiness.
Hmm.
And I relate that so much to trading. If I do in my trading what I know needs to be done, win or lose, doesn't matter what the P&L is, I can walk away that day about 10% happier than I was when I started the day. I love trading. I am passionate about trading. And if I do what needs to be done, it increases my overall happiness. And if I go in there and I said in the blog post, it's like needing to give a big presentation at work the next day and you decide to go out to a bar and stay out until 3 a.m. You sacrifice your future performance, your future happiness for what is fun right now. And when I do that in my trading, when I get sloppy, when I oversize in a bad market, my ideal day is taking 3 or 4 trades. Now, when I'm taking 12 trades a day, that's not in my plan. That's not what I'm supposed to be doing. And I've let myself get out of control.
Mm-hmm.
And for a long time, I think, I've said on air ad nauseum, I stopped drinking because I was like, if I can control this area of my life, then I can exercise that same control in my trading. And it worked really beautifully. And I've done it with other things. I will not allow myself to trade if I don't exercise in the morning. I will, there are other kind of mental games I play with myself to just make sure that I can be as focused as possible, as ready for like battle that day as I can be, as mentally sharp as I can be. And all of those things bring me such a sense of happiness. And when I am like way, way, way off, the amount of self-hatred is really overwhelming. And it has nothing to do with the loss of money. Nothing. But it has everything to do with the loss of my own self-control and the loss of the opportunity that I feel like is sitting right in front of me. Like, you have proved it to yourself time and time and time again. If you do what you're supposed to do and trade the way that you know to trade, you can slowly build an account. That is 100% true. So why aren't you doing what you know works? I mean, it makes me hate myself. And what a terrible thing.
What, to be clear, what makes you feel that way?
If knowing what needs to be done and willfully choosing to do something else.
Yeah. Okay. I think, so I don't think it's an accident that your blog is called The Intermediate Trader, right? And that I think to myself, how in the hell did I become like the elder statesman? How, especially with the Place Your Trades group of traders. I don't feel that old. I'm not that old. But anyway, the point is that I think it's more, I have been through all of this and I've learned how to focus. I've learned how to focus not just my trading, but my life. I've learned how to focus everything in my life on the smaller things that are around it. I know who I am. I know what my strengths are, and I know what my weaknesses are. I know what my shortcomings are. After, I'm 54, so I should by this time have a pretty good grasp on it. Focusing on my plan, having a plan and focusing on my plan. Somebody had tweeted in response yesterday to your thread that they had a bad day. And I asked them, do you have a plan? Do you have a process and a method? And they went ahead and gave me a process and a method, but what they didn't do is follow it. So, this morning I tweeted that I would rather miss a move than to lose money. So that means, and likewise to that, I would rather follow my plan perfectly and to spend money, not lose money, but to spend money in the market because that's what the market gave me. So I'd rather follow my plan perfectly and spend money in the market because that's what the market gave me, than to make money and trade sloppily or to lose my plan. I've got a plan. I know what I'm going to do before the market opens, regardless of what's going on, regardless of the Fed, regardless of, CPI or whatever big market moving event that we have. Like before the open, we popped 10, 15 points and you were wondering what was going on. And, I frankly, I don't care, because the only thing I looked at was price. We traded up to 39.56. So that's a spot that I want to trade. I've got a plan. It's my job as a trader to follow that plan, and again, if the market gives me nothing but expenses, then, I followed my plan and I can make some tweaks to it, but that's it. That is my job. My job is to keep trading simple and take it easy. And, easy, I've talked about how I define easy. If I buy 56s and the market stays bid above, that's easy. If I buy 56s, it goes 55 offer, that's not so easy. I don't want those sorts of trades. So I think that, as we grow and mature as traders, that we find a process that works, that's repeatable, consistent, and scalable. Those three things we talk about: repeatable, scalable, and consistent. When we find a process that is that, and we have good targets or framework to put around the market within that process, it's simply our job to execute it. Some days are going to be better than others. You don't trade well in markets that don't move, in range bound, small, no breakout markets. And neither do I. I can lose a lot of money in a market that doesn't leave the opening range, and I have it's just really large amounts of money doing nothing. Those are my worst days. Markets that move like we've had all week long. I don't care why we're moving. I don't care what is driving it. The only thing I care about is that below 40.42, I'm short to 40.05. Below 40.05, I'm short to 39.74. Below 39.74 to that flattened zone that I suggested to you yesterday. I'm short, Pax. What do? Take profit here right now at 39.57. You did. We popped back up to the opening range, 40 points. It's executing that plan that gives me a sense of satisfaction. So then I become, and this is the important part, a lot of talking to get back to this point, that I need to be satisfied with whatever it is that the market gives me within my plan. So if I've got expenses, if I spent more money than what I made, or most people would say loss, well, that's okay, because that's what the market gave me that day. As long as I followed my plan, I'm going to have big days like this week, and I can be satisfied plus happy. Just being satisfied with the market doesn't mean that I'm happy with what the market gave me. But it's being satisfied with following my plan that gives me that sense of satisfaction, that sense of fulfillment. I did what I needed to do, and I'm building my business one brick at a time, and I'm going to continue to focus on these things. And if my plan sucks or if my process sucks, well, I can make adjustments to that. I can change that. If my levels are no good, I can make adjustments to that and change that. That really helps me focus on the only trade that matters. The only trade that matters is the one that I'm going to make next. Something too I wanted to reinforce, and I think that we've talked about this many, many times, and it's so heartening for me to hear you say this. I realized years ago, my first foray into electronic trading was during my first marriage when I was getting divorced. I didn't want to go on the floor, so I got an office in Highland Park, Illinois, and I traded there. I realized quickly, if I'm making more than 5 trades, I'm losing money. If I'm making more than 5 trades on the screens, I am not making money. Now, the way that I define that is, what I call my 2x4, right? So I take 2 trades. If I don't find the momentum of the market, I cut my size and give myself 2 more. Now, I'm well capitalized and I'm an experienced trader, so I'll give myself more than that. But I need to be focused. I don't like using the word discipline because nobody ever really defines it and everybody uses it. I need to be focused on my plan, knowing that if the trade isn't easy, I don't want it. So if I sell something like yesterday, if I sell 39.96 is the bottom of yesterday's opening range, and the market goes 96 bid, that's not an easy trade. But if I sell 96s and the market stays underneath, it works beautifully. Then all I have to do is take profit at 74, flatten at 57. We get below 57, I can always put them back on. Anyway, talking too much. One thing I wanted to mention in your blog, and this is important. In your blog, you had talked about capping your day, to build, right. And I get that, to build positive momentum. So do I stop trading at a couple of $100 a day? Do I shut myself off? And my response to you is no, in caps. This was all in a tweet, so I capitalized my text. No, we don't limit our good days. The whole reason I became a trader and not a broker on the floor of the Chicago Mercantile Exchange Brokers made a lot of money and they were able to build great businesses, but brokers also had a cap on what they wanted to make or what they could make. I wanted to have an unlimited upside. As a trader, I've got that. Every trade that I make has the potential to make my wildest financial dreams come true. Likewise, every trade I make also has the potential to crush me financially. I've been on both sides of that equation. So I want to limit my downside and I want to keep my upside unlimited. There's a difference between being happy and satisfied, as I kind of discussed earlier. So I'm not going to shut myself off if I make $1,000, but when I've traded at my best, it doesn't matter on the floor, off the floor, I'm satisfied with $1,000 day. I might not be happy with it, but I'm satisfied with it. Well,
Pax, let me ask a question about that. I have two different accounts, as you know. One of my accounts, I focus purely on sort of fundamental execution. And I'll trade them sometimes both on the same day, sometimes not, just it's my own mental thing.
Sure.
So yesterday I traded both accounts. Now, one account has a lot of money in it and it has margin and I can trade in that. The other account I've taken a ton of money out, so I don't want to really focus on the profit. I just want to perfectly execute. That account has $2,000 in it. Account with the $2,000 yesterday, both accounts, I took the opening range trade. So in the $2,000 account, I took, I think, 4 calls that I let off the opening range run all the way up. I scaled some, I put a stop in, and it stopped me out. Now, it's a cash account. I'd used all my cash for the day. I made $200. So that's like 10% on the account, right?
Yeah.
So the other one with all the money and all the margin, I took the opening range trade. I went all the way up to the top where I made $7,000. Then I continued to feel like it was a bullish day. And in that, I think it's a bullish day, I ended up giving all of the $7,000 back, then flipped short and made $11,000.
In that rally, let me ask you real quick, in that rally, did you take, in the big account, did you take profit as the market rallied?
I did. I had $7,000 cash
locked in.
Okay. And I gave all of it back.
How did you do that if you locked in the profit?
Because I was out of the trades and then I took new trades thinking that ES was flagging. I was like, this is a strong momentum day. It hasn't fully reached my upside target. I think that it is going to do that. And I kept going back in being like, this is bullish. I see the flag. I see the momentum. And I just couldn't let go of this is bullish. Meanwhile, when SPY was at 400, or it was at like almost at 400, which is, I think, is it 405 in ES?
Yes.
Which I know is like the ultimate level. Some news came out about crypto not being secure. News came out, plus it was almost at a level that I know is a closeout level. And my instinct was, I think this should be a short. But because I was so like, this is bullish, I just kept taking calls and getting stopped out to the point where I was back at zero. And then I was like, this looks like an all-day fader, actually, when I look at it with the other side of my brain. So let me flip short. And then it was one of those magical moves where I just put the trade in and hundreds and hundreds of dollars kept coming into the account. So, but at the end of the day, I really am kind of prouder of making the $200, taking my plan, executing my plan, walking away versus what I did on the other account, even though any Joe walking down the street looks at that $11,000 and is like, she killed it, but I didn't really kill it.
It's funny because, you know, what screwed you up yesterday in that $7,000, you know, that would have been a $20,000 day had you not taken those extra trades, is not trading the breakouts. Again, you trade best when you're trading the momentum breakouts. You trade poorly, as do I. You know, this is, like I said earlier, this is when I get killed too. When I'm preempting the breakouts, you know, when I'm trading, saying, when I make the trade about me, and my thinking, my technical work, you know, whatever my opinion is, when I trade my opinion, my bias, that I'm making the trade about me. When I make the trade about me, you know, normally in the long run, good things are not going to happen. When I make the trade about my process, good things in the long run will happen. So yesterday you made it about you, your opinion. I think the market is going to do X, and so I'm going to trade that way. And, you know, the market didn't do anything, and it traded back and forth before it decided to break out to the downside. That's when I sit there flat. You know, think of this real quick. The opening range is a room. You know, yesterday the room was, and I know that you're trading, you know, you're trading differently, a little bit differently, but using the opening range as your pivot. Yesterday, the opening range was 39.99 to 39.96. The market is in that room. I'm flat. If the market is above 99, I'm long. If we're below 96, I'm short. That easy, that simple. Good, successful trading should feel like you're cheating. Good, successful trading should feel like you're on vacation. It shouldn't feel like work. So we make it feel like work when we're trading all over the place, our opinion, and not the market and not the process.
I will say, to pat myself on the back just a little bit, which I don't do very often, even though I was frustrated that I gave all of that money back, I was able to kind of take a deep breath, reset. And when we broke below 40.05, I was like, nothing that happened this morning matters.
Good.
None of that matters. This is I know you're short below 40.05. I know that. And I took it with some size, but I wasn't scared, right? I wasn't like, let me just I was like, this is my trade. And then executed probably the best. I made $11,000 before, and I sort of pieced it together. This was one trade. 11th best trade of my career, honestly. And I am proud that I was able to kind of, you know.
It was awesome. Yeah, you reset and you focused on that next trade. All the other stuff didn't matter anymore. Lost money is exactly that. It's lost. It's in the past. We can't get it back. We've got to focus on the next trade. And the next trade was a beautiful short from that 40.05 or 39.96 level, that 10-point range. Boom, all the way down to that 39.57 level. 39.57. Now we can get into this too. It's a good segue. So don't cap your profitable days. I wanted to be clear on that. I don't think it's a good idea to have a cap on your upside. We limit our downside. Develop a plan, develop a process or methodology, or use mine, or whatever you want to do. Not you, I'm talking in general. Find one that works, that's consistent, repeatable, and scalable. Because trading is not about how many wiggles you catch or how much, you know, scalping you can do. It's about how you find a place to increase your size, decrease your size, or not trade at all. You know, the markets are only doing one of three things, Blayne. We're going higher, lower, or nowhere. And if it's going nowhere, me and you get killed, as evidenced in that trade. That
100%.
If we're 100%. Higher, I want to be long. If we're going lower, I want to be short. And I use my opening range methodology to be able to help, as a framework, to be able to help define that. And then my major targets. We've got a new huge pivot for the entire life of the June contract, or the second quarter of the year. And that's in the S&P is going to be 39.57. 39.57, and we'll talk about the NASDAQ in a second. 39.57, it's not just where we're trading now. That's the biggest pivot. We opened there on Monday. We rallied 117 handles from there during the week, all the way up to 40.73, and then we came all the way back down to it, okay? So above 39.57, I'm long up to 39.74. And then I take profit there, and I'm long up to 39.99, 40.05, that whole range. The market now, 39.99 is a new target for me. It's going to always be a target, but I have to see what the market is going to honor more. 39.99 or the old one at 40.05 because they don't change. Above 40.05, I'm long up to 40.42. Above 40.42, up to 40.72. And I told everybody, these are levels that we talk about every single week. They don't change. And I told everybody, we were all long the other day, FOMC day. I told everybody, just like yesterday in my group, take profit here right now. And we all did. And then the market retraced back down to the OR, and that, which happened to be 40.42. So what the market does on the way up, the market will do similarly on the way down. So now today we're going to open at or around that 39.57 area.
You know, we're opening right now.
Yeah, that's all right.
I don't want to mess you up. I know that that's important.
I know it's already too late, and the better trades have been happening later and later anyway.
Totally.
So 39.57 is going to be that major pivot. I want to be long above it and short below it. 39.57 to 39.74, 39.74 to 39.99. 40.05 above to 40.42. On the downside, under 39.57, then we go back to that big level, 39.12. Underneath 39.12 to 38.71. Underneath 38.71, it's a whole new trade. Two closes underneath 38.71 triggers a move down to 37.26, down to the lows, frankly, one level at a time. NASDAQ is going to be 12,595. So 12,600 to 12,808. So as NASDAQ opened above 12,808, I want to be long. NASDAQ is much stronger than the Russell, much stronger than the S&P.
Amen.
So it really is. And the S&P has been a better downside trade. NASDAQ better upside trade.
Apparently, Nvidia has been on a run like gangbusters, which I know is helping the NASDAQ.
Oh, again, it doesn't really matter to me. It's the only thing I care about is price moving to price. So one level to the next, like ladder rungs. That's all. What's creating the volume or what's leading, what sector is leading. I leave that for macro traders or the smarter people than me. All I care about is what the market is doing according to my plan. That's it. Anthony Crudele had a great tweet the other day about what we used to do on the trading floor during Fed. We'd all be in a break room playing cards. I'd be in the Merc Club drinking coffee. I still smoking cigarettes one after the other.
There you go.
When the number came out, we go back on the floor. I didn't care what the Fed did. I mean, I did as an investor, as a long-term, but as a trader, the only thing I cared about is we're above 12,800. That means we're going to 12,920. Anyway, those levels. So let's make some picks and then get into the trading day. Let's go back to the SPOOs real quick. The opening range in the S&P is 39.57.75 to 39.63.5.
Is that a good opening range?
It's a great opening range because we open at 39.57. You can't have a better opening range.
Love that, which means I'm probably going to trade today. Pax.
Oh, I will too, but I'm going to preserve my capital. I'm only going to take those easy trades. If I buy 63, what's the top of the opening range? 63 halves. If I buy 63 halves and that market goes 63.75 bid, 64 bid, that's an easy trade. That's what I want. I don't want to buy 63 halves and have the market go offered. That is not easy. And then buy them again, offer, I want it to go bid. If I sell 57.75s, like right now, the market is just slightly below the opening range. So I want to be short from here and then pay for my trade, remove my risk, and then take profit down to my targets. I don't want to overtrade this. There, boom. All of the traders in my group should be paying for their trades right now. The pay line right is 53.75. So the traders in my group are short from 57.75. They've paid for their trade of 53.75. They've removed the risk. Now they can stay out of the way of the market and let the market either come back up and stop them out for a scratch, in which case they made money anyway. They scratched the balance of their trade, or the market is going to trail off lower and they're going to make a bunch of money. They'll flatten at 39.12. It's that simple. That's
favorite type of day.
That's capital preservation. That's it, right there. I missed the opening range, so I've got plenty of opportunity during the day to be able to sell them in the 40 handle, the 20 handle, all the way down to 12. If I've got a superpower as a trader, it's the ability to miss moves and not be emotionally tied to it.
Not mine.
All right, I guess we do have to get back into it. So we are below the opening range. I will put up the strike list, will you? I'll take the nose on the nose at 39.5 are too expensive. I like taking cheaper ones, but I would certainly take the low-hanging fruit nose as long as we're below the opening range. I would take the nose underneath 39. Strikes are a little bit on the downside. They're a little bit expensive today. I will take the nose underneath 39.5, 39.40. Shit, I will take the nose all the way to hell down. Again, underneath the opening range, underneath 39.57, we should target 39.12, but we have to stay below that area, and then we will target 39.12. Let's take a look at the Schnazzy Nazzy. The opening range in NASDAQ, for those of you that traded, is 12,817 to 12,833. 817 to 833. So we're trading right at that 12,800, 808 level. I want to be short below this level. The strikes on the NASDAQ should be cheaper because it's such a strong, because the market's so strong, so the market makers know what they're doing here. I don't know if I would take any of the nose in the NASDAQ.
It's been so strong.
The best traders I knew on the floor in the NASDAQ pit were spreaders. They spread the S&P against the S&P against the NASDAQ, and they did so well. They were big traders. They were great traders. I never figured out the formula to do what they did. If they sold 100 lot in the NAS, they would go ahead and buy 50 in the SPOOs. I forget what the ratio was or is. And there's still a lot of traders that do that. The traders that are buying the NASDAQ and selling the SPOOs are making just a fortune, a ton of money.
Yesterday I made $10,000 in the S&P and $1,000 in NASDAQ, taking very similar trades, but just, I like that downside.
How about that? Isn't that amazing?
I mean, they were same strikes, same, like it was all apples to apples, and I just couldn't get the NASDAQ to dump.
Hey, by the way, we've got PMI in 10 minutes. So don't forget, we got a major market event coming out at 9:45 Eastern, 8:45 Central. So I'm going to jump off and join the traders in my group and make some money here. We're not really doing a whole lot yet, but we will after that number. That's another reason why I was okay going over, because we've got that number coming out. Bonds are very important here. Gold is around 2,000. Bonds are breaking out to the upside. The 30-year bond is breaking out to the upside, and 132.30. Please pay attention to the 30-year bond, because it's really an important trade in capital flows. The bonds are starting to scream higher above 132.30. The 30-year bond can trail up to 134, 135. So that'll be a major market event for capital flows, and rates will continue to affect everything. Captain Obvious, my brain is racing because I'm missing the trade. So my sister, I will see you later. I'll talk to you later. Have a blessed and very profitable day. To all of our Muslim brothers and sisters, Ramadan Kadeem, I think you say. Happy Ramadan. Have a blessed and wonderful Ramadan. I respect anybody that opens up a trading account to try to better their lives and the lives of those that they love. I have nothing but admiration and respect for you, Blayne, and for all of the honesty that you share on Twitter, and all of the honesty and the raw emotion that you share in everywhere, because that helps. It's a great way for traders to continue to learn from your experience too. So anyway, have a great weekend. I'll talk to you.
You too. I also want to say very, very, very heartfelt thank you to everyone who watches the show every week, everyone who's involved in the capital preservation community, and everyone who read the blog. Thank you guys. Have a great weekend.
Amen. Have a great weekend, everybody.